Hello, everybody. This is Rodney Sinclair from Sinclair Real Estate Group. Thank you so much for tuning in today. I am here with one of my good friends, Leo Turco. Leo Turco is of Better Half Lending with Superior Rate Mortgage. He is an amazing mortgage broker, has a long history in banking. So I just want to say thank you so much for being here with me today. Leo, if you could tell folks a little bit about yourself.
Yeah, sure. First, I want to say thank you, Rodney, because any forum for people like myself or you is tremendous. So thank you. Myself, I've been in finance for year 21. Started early as a wealth management advisor. So I am very, in tune with investments, insurance, stocks, bonds, anything that you want to think about. And then a large portion of my career was working in banks, doing mortgages, home equities, credit cards, advising clients on everything. And more recently, I just decided to just go directly into the brokerage world of helping people with just mortgages and just helping people on like one specific need, which is home ownership and leveraging debt.
That's great. That's great. And as you know, my mission as well is to help people create generational wealth through building their portfolio. So this week, I've talked a little bit about with the folks that I have in my corner, the differences between home equity loans, home equity lines, and doing a refi with a cash out. And so, that can be very confusing for people, sort of what they are and how you utilize them. And we had this conversation, the other day, and I said, this is something you got to tell people. So what is the difference between a home equity loan and a home equity line and just getting a cash out to a refi?
Yeah, certainly. So a home equity is essentially look at it like a big credit card where your house is the thing that protects it. So like who would give you a $150,000 credit card to just go out and spend? Well, your local bank would. So that's where home equities are generated for clientele. So you would go to your local bank to get a home equity line of credit, home equity loan, and essentially they utilize what's available for equity in your house to say, here's a big spending limit. Go do what you want with it. Interest rates are variable. On the loan side, there's no closing costs, no points, but on the flip side, the rate's higher because there's no expenses on that side. A cash out refinance is strictly just pulling cash out of your home and getting it fixed for however long, 10, 15, 25, 30 years. And they all have specified purposes.
Great. So just to recap, a home loan or a home equity line, that's like getting a credit card with your house as the collateral. Correct. And that has a higher interest rate. It could vary between a loan and a credit line. But when we talk about a cash out, with a refi, that's really getting a new mortgage, but getting some money as well. And now you have this longer term mortgage at a higher amount per se, for a particular interest rate, correct?
Correct.
Now, when would folks use these products? How does one differentiate, oh, I use a home line now, or let me refinance and cash out?
Yep. The number one thing for like anybody is just to determine like what your purpose is. Like, what's the goal? Like, what are you trying to accomplish? Because every solution fits a specific need. Historically, a home equity line of credit is great for a few of like many things, but like just to touch on a few. Number one, if you have equity in your home and you have no defined goal, capitalize on it, utilize it with the home equity line of credit. What that means is that you just set up a safety net in life, and it acts like your umbrella.
That's
so
important.
how many people have access to $50,000, $100,000, $150,000 in any given moment? You can just write a check. Home equity line of credit accomplishes that. It's like your umbrella on a rainy day. You have one in your car. You don't expect it to rain every day, but if it does, You pull it out and it's there. Home equity, life rains on you, it's already in place in there. And I always tell people that when life is good, when things are good, that's when you put these things in place. Because if life takes a turn, chances are something's changed that could also make it more challenging to qualify for, right? Another reason why you would do a home equity would be for incremental expenses, right? You have a project on your house, you're doing a kitchen, an addition, something, and you don't really know how much you're going to spend. So rather than take out a loan for like $100,000, when it could only be 60, it could only be 65, you kind of just write a check as you go. And when you're done and you've accumulated this balance, then you look for an alternative solution to get rid of the fact that it's a variable interest rate. Yeah. What else can I touch on that?
Yeah. So no. So again, when it comes to a line, the line gives you some level of security, right?
Yeah.
And if you don't have a clear purpose, it's good to have that line. That way you can pull from it. But if you are thinking about doing something else, something longer term, maybe you pull it from, you do a refi, bigger projects. Is that what we're getting to?
Yeah, sort of get into it. I mean, like this time in history, it's never happened. Like it didn't happen for our parents, our grandparents. Like historically within the United States financial system and however long they've been tracking for, interest rates have never been this low. And people have been hearing this since the summer, like rates are the lowest ever, but like it keeps happening. So like the other day, which was Wednesday, rates hit another historic low. That means that the average 30-year interest rate was around 2.75% with no points. Like how much lower can they go? So it's, we want to have conversations with individuals about like what are you really looking to accomplish? Like what is the need? What is the purpose? And if it's undefined, try to help them get to a more defined purpose, because this moment, it's not going to be here forever. We all have predictions that'll continue a little bit through 2021, but like at any moment, that rates could go up. So today is what you have to take advantage of. So I would say if there's any effects of consumerism, whether it be student loans, credit cards, accumulation of balances on home equities that you had in years past, that refinancing and restructuring through pulling cash out and doing a mortgage and getting that interest rate fixed for 15, 20, 30 years, whatever it is, it's fixed. You alleviate the biggest hedge. The biggest risk to borrowing money is the cost of interest. Yeah. So a home equity is variable. A home equity loan is fixed, but it's more expensive because it's free. But a cash out refinance, yeah, there's closing costs, but it's not as expensive as people think. Like imagine getting an interest rate under 3% to restructure your debt and be like, wow, I don't have to worry about that credit card bill anymore. I don't have to worry about that student loan bill anymore. Or I can finally redo my kitchen. I can finally put that addition on and move my parents in. It's just a tremendous time right now.
And one of the things I talk to my listeners about a lot is cashing out on your equity to purchase investment property. And so again, when you talk about borrowing money, we're always trying to figure out, and a lot of financial planners talk about this, where are you going to get the cheapest cost at, right? And being able to wrap things into those lower interest rates. And so at a time where interest rates are so low, to be able to wrap that down payment, right, into your existing loan at a very inexpensive, historically low interest rate, may be something that folks want to look at. So listen, Leo, thank you so much. This has been a tremendous amount of help. I truly, truly appreciate it. Before we go, given the season, I want to ask you, 2020 has hit us with a lot of things. Most notably, obviously, the pandemic, which led to huge economic downturn. But at the same time, we have so much to be thankful for. So what would you say that you are thankful for, reflecting back on this year?
Um, I honestly want to give thanks to every person that, is gracious enough to allow me to interact with them. It's just something magical when you believe in yourself and you focus on self-development, that the world you just attract great human beings. I've had the pleasure of meeting you, my support, my partner in business, Yasmin, my coworkers, like every client I've encountered this year. It's just been tremendous. I continue to be opened up to new books, new ideas, just positivity. So I'm just grateful for, I don't know what to say. Like, I'm just grateful for the great human beings that have come into my life this year. They've made every moment worth it, and every idea or recommendation they've done has just helped me better myself also.
Well said. Well said. Well, Leo, thank you so much. And folks, if you're interested in speaking with Leo about your mortgage, your refi, restructuring your debt as it relates to your home, please reach out to him. Again, Leo Turco of Better Half Lending, with a team of Superior Rate Mortgage. You can find Leo right down there. You see his URL, www.leoturco.com. Feel free. You can also, Leo's very available. You can reach him on his cell, send him a text. It is 781-389-5242. I am Rodney Sinclair. It's the Sinclair Real Estate Group. Leo, thank you so much for spending this time with us today. I truly, truly appreciate it.
Thank you, my man.